How's it going, everyone? Professor EJ here, revisiting my Palantir thesis. So, I valued the company about 2 months ago, and it was more of a valuation exercise to show that the sky high valuation for Palantir is more justified than you think from a theoretical perspective. But I wanted to revisit this company more from a stock perspective and take more seriously the view of should this be in my portfolio or not, and see if I can get to a true variant view. And I have, just to show you all that the tail is longer than you think. That is the thesis. So let's dive into why that's the case for me. So let's first simplify Palantir and think about it not from the company's perspective, but from the customer's perspective. Why would you even go with Palantir in the first place? What is the value proposition being offered? And what are the benefits to you? So let's start off with you're working at a global beverage company within the supply chain aspects, logistics aspects, and it's like a Coca-Cola, a Pepsi. And one region, U.S. region, is losing money. It's losing money specifically on orange juice. It's something that you can clearly point to and pinpoint this is a problem. Since you work in logistics, you have logistics friends, former employees, and these sorts. They talk about Palantir from another company perspective and how it's kind of helped them. So you want to give them a try. This is where their boot camps happen. It's like a 3 to 5 day boot camp where they essentially show some of the things that Palantir can do if you just give them a little bit of your data to work with. And the boot camp works. In a few days, engineers can see like, oh, this can be very powerful. We barely gave them any of our data. And from there, we were able to solve this problem relatively quickly, or at least see how this problem can be solved. We can see how it can be solved. Imagine what it will be like if we gave them all of our data for the entire company. And this is the whole idea of becoming the operating system comes into play. So bring in data, not just from logistics, but from finance, from marketing, every other aspect, and see where holes can be plugged and how interconnected these different departments can be. And you tell one department one thing and the other department actually starts to execute on it. So it's not just, hey, we have a problem, make this fix. It's more of a, this department, we have the problem. Next department creates the fix, and another department helps in implementation. It's like it brings it all together. So this is the land and expand strategy. This is how Palantir and again, you can see from the customer's perspective why this is good. Because you have me solve all of the problems, in particular, mainly for me. It's not like other software companies where they're deploying new modules and it's kind of help a little bit of everybody, even within a vertical space where they're just helping one industry. There is something different about helping one industry in total versus helping one company in particular, like that customization piece. I mean, I believe that is probably the biggest area that Palantir really sticks out. Through this is how the whole become the operating system of a company works out. Larger companies, more complex departments, more complex intricacies. Palantir's value proposition is pretty strong, especially if you get to full deployment. So you move it from it can work, you see the potential to, oh, it's working and then some. Now with that out the way, let's figure out what is pricing to the stock today. And it's still pretty high. When I looked at the stock 2 months ago, the trailing EV to sales, or even price to sales, since they're about the same, was a little bit over 100 times. I remember right, it was closer to 110. And I was saying that 80 to 90 times theoretically could be proven out well. Now, being more concrete about it, the stock is priced as if it's hitting the holy grail, which it is. What's the holy grail? At least from a software perspective, stock's growing a ton. It's growing almost like a startup in some cases, while still being extremely profitable on a free cash flow basis and having essentially top tier KPIs for a software company. A lot of that growth is expected to come from the commercial business line. Consensus estimates really see twice the number of customers overall over the next 2 years, and 3 times the growth in commercial revenue. Remember, Palantir has 2 main business lines. One aspect focused on governments, other aspects focused on commercial, or think of large organizations, large businesses that have some data complexities that I need to work out. So again, that customized solution is very powerful to them. And what's well known, the main narrative with the stock now is the commercial revenue is going to drive the bus. But even with it driving the bus, it's driving the bus mainly through new customers. And like I mentioned before, best in class software KPIs. So whether that be the rule of 40, which for them looks more like 100 to 120%, depending how you shake things out. The bookings, the net retention ratio, everything still looks top of the line. Also, not just look top of the line, it needs to stay top of the line. So there is essentially no room for error on the execution part. Now, this aspect doesn't scare me too much because in a lot of ways, when you're investing in a stock, you are investing or making the bet that this company can execute in some form or fashion. So this isn't that surprising to me. And to this point, Palantir has earned a reputation for actually executing and doing it very well. I think there's a little bit more to that than meets the eye, why that's the case, but this is not scaring me away. Well, don't ruin it, Alex. Now, to just look back in time and just utilize a reverse DCF just to check the valuation from another perspective and go a little bit more detail. You see a lot of numbers here on the screen, but the main takeaway here is that, and I talked about this in the last video, why I wouldn't use a 10-year valuation forecast period for Palantir. I'll use 15. Give them a little bit more love, give them a little bit more benefit of the doubt because they are earlier in their life cycle. In 15 years, their revenue is going to be at a level that is half what Microsoft is today, while being at double the free cash flow margins. So Microsoft revenue is around 200 million, maybe a little bit higher than that, and free cash flow is about the same as what we expect from Palantir 15 years from now, and that checks the boxes to me. That actually makes a lot of sense. Especially the company is built in a way where I expect the highest free cash flow margin potential relative to almost any other software company. Now, when I put it all together, and I show with a 3% perpetual growth rate and enterprise value, this is how you get to zero. So you can really make sure you got everything down. And you also see some things that maybe you're not used to seeing before, like this idea of a gross cash flow versus free cash flow, and think about the reinvestment rate, which I get to it in a different manner than you might think of if you come from a finance background. I'll have the spreadsheet actually in the description for you to download and see this entire process. Now, what do I believe the market is missing? In looking at things from more of a customer's point of view and then bringing it back to Palantir, that's when things click. Because in understanding why an organization will want more of Palantir, more of building out the ontology, more of letting Palantir become the operating system, I came across this role that I found was very unique. I don't think the market's truly catching on because it is different. And that is the role of the forward deployed engineer, or FDE. This role is some combination of forward-facing or front-facing, working with the clients and working with the engineers of the clients, since you're an engineer yourself, while at the same time work on the particular software that's being utilized. So you're kind of front-facing and you can work in the back. You kind of blend of both and you kind of bridge that gap. And this is a role that Palantir pioneered and actually called deltas within Palantir, and really is the separator. It's the thing that I believe that consensus continues to underestimate its impact. Now, in terms of reinvestment, because I believe, because this number's not actually anywhere, but estimating, I believe there's at least 700, probably more like 800 plus FDEs within Palantir today. How did I get to that number? Well, do know there's about 1,400 engineers or so. That's the rough estimate. In other places have leaned into saying like, hey, there's at least more than half of those engineers are in an FDE position. And Palantir continues to hire for this role. If you go onto Palantir's website and you actually go into the career section, you just look at all the different roles, the FDE role is everywhere. And it's across multiple departments. You see it in different parts of the commercial lines, different parts of the government lines, and other areas that don't even connect to these two. So I believe it continues to evolve and continues to be somewhere that Palantir continues to reinvest in that the market isn't catching. And the more involved FDEs are in an engagement, the more they can serve as middlemen between the client and the team. And to me, it's almost like a flywheel. It's a flywheel compounding knowledge effect. The FDEs help solve the problems for the clients, also work with the development team, work specifically with the product team. And there's also an element that can help in scaling solutions and making it easier to get in front of potential clients. So how does this all play out? Especially for me in having a variant view. A view that is different than consensus, and I can pinpoint exactly where that is the case. Well, the biggest thing is the FDEs can find more high value problems than was being priced in. And what I mean by that is, if you think about it for a second, part of the reason why their net retention ratio is very high at this very moment is because they are helping, or they're able to find more problems within the organization through that ontology, through their setup, for their existing customers. And it's not just existing customers that are relatively new and they've been with Palantir for 2 to 3 years. And I'm talking closer to a decade plus. I mean, just look at what happened with the top 20 customers just this past fiscal year in terms of a jump by about 20%, if not more. And now I'm thinking about it more in terms of, hey, it's not just for the top 20 customers that get a lot of love. I'm thinking of customers 21 through 100. Yeah, they're going to have thousands of customers, sure, but that next crop that could enter the top 20, they too have plenty of problems to solve as you add more data and the world gets more complex. And even if you start integrating more AI aspects within a company that's outside of Palantir, that just gives them another layer for Palantir to discover issues, problems, areas where departments need to be more connected. They're just going to find them all. They're going to find them and they're going to keep building on them. And the FDEs help with that. Because remember, FDEs, they're almost like management consultants. They can sit on site with a company, spend a lot of time with the company, and then bring back those learnings and those insights to Palantir to help make the products and the ontology aspects better. So from that perspective, I believe things are being missed. And I'll pinpoint exactly where I think that's the case, but I got to walk through these other 2 points. The second point is a little bit more of a hunch. I'll admit it's not fully there, not fully built out, but I do believe they're playing a role because, again, FDEs are scattered all across Palantir. That includes more in those roles like business development, trying to find new customers, trying to set up those boot camps, what to talk about or discuss with those boot camps, the best way to show the power of the ontology aspect of building out the operating system. What's the best place to do that? I don't necessarily think it's going to lead to more customers. I actually believe it leads to less effort per customer. The cost of acquiring a new customer is going to go down. And it can go down maybe in terms of sales and marketing. It can go down, and that's where I think it will go down the most. It can also go down just in terms of the conversion rate. You share this boot camp in its different verticals. So this is already known for the government, but for those that are in certain verticals, certain industries, like healthcare is a big area for Palantir, or financial services like the banks, or even just more consumer focused companies that have a lot of supply chain intricacies that need to be considered. The more that the FDEs gain knowledge and understanding here, the more that they take this learning from this one customer in this industry and they can apply it to the next 5 to 10, and it makes it easier to sell. I mean, don't get me wrong, Palantir's they already want to grow revenue while also simultaneously having less people. And I don't think when they say less people, definitely means less FDEs. So this is how it will play out. And then lastly, Palantir still holds a first mover advantage when it comes to this role. Yes, you're seeing other companies trying to utilize it. So think of companies like OpenAI. They're leaning into this, or Salesforce apparently starting to have openings in this role. I mean, even some more well-established startups that are still private now. The issue is that these companies are not built with the FDEs in mind, because the FDEs work best for customized solutions. So unless a company started similar to Palantir with the idea of we're going to build a customized solution just for this company, where if you look from the outside, this isn't a scalable business model. Those type of companies not really been started. Like Palantir is still the only one that still has like this view, this idea really just ingrained in them. So because of all that, I still believe the best talents in terms of this FDE role will end up at Palantir, at least for the near future, next 3 to 5 years. Now, how does this actually play out in the financial statements? Well, my estimates and the consensus estimates aren't really different actually for fiscal year 2026. They're actually very similar, if not the same. It's 2027 and beyond. That's when things get interesting. And this chart here, pay attention to the average revenue per customer, or ARPC. Now, consensus is baking in a large jump in clients this year and another large jump for fiscal year 2027. But in that second large jump, slowdown or decrease in average revenue per customer. I don't think it'll be that much of a slowdown. And the reason I don't think it'll be that much of a slowdown is, again, the high value problems that Palantir can find within an organization has a long tail. The tail is longer than you think. Long tail. They can find things that can lead to more revenue 5 years out once somebody's an existing customer. You saw on that earlier slide with the land and expand. When they first have the boot camp, they're only utilizing 2 to 3 data inputs, data sources. When you start getting to the hundreds, you'll be surprised of all the various problems you can find. It can become a very complicated data science problem really quickly. But that complication is where Palantir can find plenty of high value problems. So I don't think it's going to drop off that far. And I think it will actually level out even while they continue to add on more and more customers. So that big difference in the minimal drop off plays out to revenue growth, at least through 2027, where I see a much larger jump. Like, yes, I do believe Palantir can keep up growing at a 50% plus revenue growth, at least through 2027. And yeah, just overall, with this variant view, this is, in my opinion, this is the idea of salience bias really playing out. And what I mean by that is new revenue or revenue growth, especially through new customers, gets a lot of love, gets a lot of attention. That's where people like the first look. That's where consensus looks. That's when you think about industry growth. That's where we'll look. Underappreciate the power of growing your revenue through existing customers. So playing this out, and I also project a little bit further out into the future, at least through 2029, where consensus stops at 2027. So the big thing here is primary thesis, like I mentioned before, plays out right here, average revenue per customer, where again, I agree with consensus, large jump this year, next year, not as far as a drop off, and a leveling off in the following 2 years. Now in this second line, this is where I believe my hunch plays out in terms of they have to spend less per new customer that they acquire. But it doesn't play out that much. I actually have it as a very minor, small benefit in my base case. Now, for those who don't know exactly how I think about investing, I'm more of a forward valuation, future valuation person instead of looking at what's the stock value today. So I combine three numbers, what I think the stock is valued at today, and create a compound annual growth rate since I tend to want to hold stocks for 2 to 3 years. So what was the undervaluation today? What's the difference tomorrow? So valuing the stock, about 3 years in the future, and the expected shareholder yield. I combine those three, I get an expected IRR. And for me, I need the IRR to be higher than the sector hurdle. If it's higher than sector hurdle, And I feel pretty good. I have a variant view that's connected to that that's going inside the portfolio. And for Palantir, sits inside the technology sector, hurdle is 15%. Kind of a high bar, given that on average, the market returns 8 to 9%. But this is also why I wanted to be sector specific, because just because it's a higher bar, or look at S&P 500, it's a lower bar. If I just looked at just that, I'll end up choosing a whole bunch of tech stocks. And I don't want that to be the case. I want at least some level of diversification. And I don't want to be taking sector bets. I don't want sector bets. So I'm going to create a customized hurdle for each sector and work with that. So the view on tomorrow's valuation and just in total, I believe that in 3 years from today, Palantir is going to be viewed in a similar fashion as CrowdStrike today. Again, you look at the last video, I made that comparison and why there's just a huge difference, even though it doesn't seem like there's that much of a difference between the two companies. And if you utilize multiples that you use to value CrowdStrike today, then 3 years or so from now, Palantir can easily double. This is on the base case. I can see Palantir doubling in value. If you take that double, turn it to about a 2 to 3 year CAGR, utilize that, taking some other numbers, I'll even say that, okay, even at 80 times and what's priced in, okay, stock might be still slightly undervalued, overvalued, but again, not by much, very small amount. I actually think it's close to fair value today, given what's been happening in the world and the stock coming down about 20% from last time I talked about it. So yeah, get a CAGR or total IRR, expected IRR 20%, which is higher than the 15%. And again, that is driven mainly by the valuation tomorrow. That's where I see the difference. And especially if you watch my very first video where I started to get back into pitching stocks on YouTube, Ferrari, this is actually what I'm more comfortable with. Whereas the Ferrari situation, there was actually a level of discomfort of where I expect the returns to come from. Now to dive a little bit deeper into scenario analysis, because you just can't look at the base case. Of course, we already know about net retention ratio. I've been bringing this up, and I think it plays more of a bigger role for the customers 21 through 100 versus the top 20. The marginal cost to acquire new customers, and again, that's the hunch. That's the secondary thesis. That's how I expect it to play out. And then we got Alex Karp. We got the CEO. Now, I have to admit this up front. I am not a fan of Alex, like at all. Like how he thinks about the world, some of the political stances, just almost the elitist aspects of it. I am not a fan. I'll admit that up front. So this will actually make this valuation and investment in general a little complicated for me. A little bit of a small ethical dilemma or moral stuff. It comes into play a little bit. It was like in investing in this company, I am still supporting him. You can make that argument. I don't view it fully that way. I recognize the power of Palantir as a company, and it's one of those situations where it's like, I would really like this company. He just so happens to be the face of it right now. Hopefully one day that changes. But again, some people really love him. That's part of the fanaticism around the stock is him, and I get that. And let's just say maybe these more charismatic CEOs I'm just not a fan of, because I'm not a fan of Musk either, or I'm not a fan of Peter Thiel. I could just not be a fan of the PayPal mafia. That's what it really sounds like. But it's neither here or there. I'm listing Karp here because he can do something stupid. He can say something stupid that can, I won't necessarily say really hit the fundamentals of the company as much, but can really rock the sentiment. That's where I think step in. So when you play all this out, looking at 3 different scenarios, the big thing, again, connect to my primary view here is average revenue per customer and where I see the growth of it. Keeping in mind, expecting a large jump just in 2026 alone, how's that play out beyond that? How much of a fade that initially happens? And then does it level out or not? In the bear case, that's not the case. I don't. That's where again, pay attention to that 7.5 number for valuation difference today. That is a lower multiple happening today and a sustained lower multiple. Again, mainly more so if something happens with Alex and maybe he says something controversial that puts people off, and the multiple doesn't recover mainly because this is combined with not even a big slowdown or even a big misexecution of the business, just a little. All he needs is just a little bit of a fall off because the stock is priced to perfection right now. And I'm putting a negative 12 expected rate of return versus a plus 15 tech sector hurdle. Oh, we got a problem. That's a lot of red. Things can go very bad very quickly. So, yes, this is definitely a high risk, high reward play. Now, speaking of that reward, if my secondary view is actually stronger than expected, which is, yes, marginal cost goes down per new customer added because of this industry expertise that the FDEs can bring, then the stock can triple in about 3 years. So we got, in one case, stock can go down roughly 50%, or the stock can triple. I mean, that's where I'm at. That's where I'm at. Things can really be just that drastic. Definitely more of a boom or bust. Now, a lot of this boom or bust nature, even with keeping that in mind and even giving a little bit more of a weight on the bear case, even with that said, still beats sector expectations for me. So I'm going to put it in my portfolio. Now, you might be surprised to hear this. This is a lot of work, a lot of effort, a lot of thinking for a 1% position in the portfolio. In the S&P 500, Palantir is about 65 bips, so 0.65%. And I'm putting it at 1%. So I've done all this work. I've built up this conviction. Why still a small overweight? Well, a huge part of it is, again, let's keep in mind how I feel about Alex personally and the boomer bust potential of this stock. Value investors hate it. I mean, just straight up. They're not a fan. I mean, what really sparked all of this was the Michael Burry short. And even when I hear typical investors talk about the stock, they just run straight to the valuation. And on one end, I'm like, there's like this anchoring aspect of where you expect a valuation to be. Because again, you're used to seeing companies in a certain stage in their life cycle that are in the stock market. And Palantir doesn't fit that description. And they're also operating at a very high margin while still not fitting that description from a growth perspective. So I get that aspect. But the problem is the stock needs to drop far. It needs to drop like a lot to get a value investor, your typical value investors, into it. And again, focusing more on like price to earnings. I don't really focus on price to earnings as much more of an enterprise value based investor whenever possible. Even from a price to earnings perspective, stock will need to fall 60, 70, 80% just to get in the typical PE range of, what was it, 30 times, 20 times? Just to get the interest for value investors to serve as potentially the floor for the company. And they start buying just on valuation alone. So that's not great. The short interest also isn't great. So you got Michael Burry betting against this. And I know there's more put options there that's in the mix that might not be counted here. But I prefer stocks to have less than 2% short interest. And again, that can help on the upside. But man, if that bear case play out, it can really play out. So not necessarily a fan of that. Normally don't like buying stocks that are hated by others. It's just hard to create the asymmetry. And then we got the volatility of the stock itself. Stock has a beta at or around 2. And a lot of that beta is actually driven more by the relative volatility being extremely high because the stock has lower institutional ownership than your typical stock in the S&P 500 or even typical stock in tech, which already starts at a lower figure. Because of that aspect, meaning that stocks owned more by retail investors, it has a lot more volatility connected to it. Within a portfolio, it definitely punches above its weight. So I brought this up before in the other video that even at a very small position, Palantir at times can operate as if it's a top 10 position. And here at 1%, at a 1% position, Palantir can operate or act like it's a top 5 position in my portfolio. There's days where that actually happens, where I see it near the top of a very green day or at the very bottom or red day. And this is still a small, very small position. So normally I don't, again, not a fan of all that volatility. I am definitely more of somebody who believes in risk contribution analysis. That is a next level topic that maybe one day we'll get into here. But just in general, from that perspective, prefer more of the at or maybe lower than one beta variety for stocks I want to make like the top weights. I mean, with that said, if things continue to go on in the world with the wars and all that, and the stock goes down to not just 80 times where it's at today, but 60, 50, yeah, it will be a top 5 position, meaning there are going to be days it's going to act like it's number 1. So I can work with that. Now, which name is next? Which stock is the next one on the board? Well, been doing a lot of work in the AI data center supply chain. And these two names come to mind, Broadcom and ASML, but there's other names that's in the supply chain that people don't really talk about that I'm diving a little bit deeper into. Speaking of stocks that are likely to not be hated by anyone, industrial is a great place for that. So that is another area I'm diving a lot deeper into and probably will be the next stock I pitch, at least next stock that becomes like a top holding. But we'll see if I get around to bringing that to you all. Because again, you might be picking up, I can only do these videos during my breaks because being a professor is a very high time commitment. So maybe summer break is when that will come out. And then, of course, I can also talk about my mistakes because I have made some mistakes, some errors. You see that Ferrari, you see the first video I brought up, and you see Ferrari here. That is for a reason. So I'm doing that with my classes already. So I might just do it here as well. So yeah, the tail is longer than you think with Palantir. Consider holding it as a stock, and I have just upweighted in my portfolio. Again, it's not a large jump from 30 bips to about 1%, so 100 bips. But if the market continues to go down, this is definitely the first stock I'm going to add to. All right, that's my pitch. Let me know if you have any questions or thoughts and comments. I'll see you on the next time.